Hey traders, welcome to another video. Today we're going to talk about how to trade less and win more, the framework for A+ entries only, and how to wait for only the best setups and ignore the noise. So the hardest part of trading isn't finding opportunities, it's having the discipline to ignore the mediocre ones. In a world where markets move constantly, social media floods us with winning trades, and the ability to wait patiently for truly exceptional setups become your greatest competitive advantage. So this system transforms patience from a vague concept into a concrete and actionable framework. So instead of relying on willpower alone, you'll have specific tools and protocols that make waiting not just easier, but also profitable. The goal isn't to trade less for the sake of it, it's to trade only when the odds are so heavily in your favor that patience becomes your profit multiplier. Most traders fail not because they can't spot any good trades, but because they can't resist taking the bad ones. And this system solves that problem by giving you clear criteria for what constitutes as A+ setups and structured activities to keep you engaged during waiting periods. Also proven strategies to handle the psychological pressure of missing out, FOMO, of missing out on trades that weren't worth taking anyway. So let's begin. So we begin with the first step of the plan, and this is the setup grading system. Now we have objective criteria for trade quality, and this is to transform the subjective gut feeling into quantifiable trade quality metrics. Every potential trade gets graded before you risk a single dollar, ensuring you only engage with setups that meet your highest standards. So the A+ setup criteria checklist, we have trend alignment, which consists of 25 points. So we get this checklist is all about getting to as close to 100 points as possible. And we start with trend alignment. This is the trade direction. We need to see that it matches the primary trend on at least 2 higher time frames. That doesn't mean the 5 minutes, the 15 minute. This means at least the 30 minutes or the 4-hour time frame. You can go up to the daily time frame, but that's a bit overkill for us day traders and scalpers. If you're a swing trader, of course, you will most likely use the 4-hour daily and weekly. So anyway, there's no fighting the current. You're swimming with the tide, not against it. The next up we have is technical confluence. This also consists of 25 points. Multiple technical factors converge at your entry point. This includes support and resistance ratio with clearly defined stop loss and profit targets. This includes support and resistance levels. This includes moving averages, Fibonacci retracements, and also pattern breakouts, all pointing in the same direction. Next up, we have the risk to reward ratio, which is set to 20 points, which is calculated on a maximum of 20 points. So we need a minimum of 1 to 2 risk reward ratio with clearly defined stop loss and profit targets. Your potential gain must significantly outweigh your potential loss before you even consider the trade. Then we have volume confirmation, which is calculated to a maximum of 15 points. Unusual volume activity supports your thesis. Big moves need big volume, because without it you're trading on hope rather than institutional backing. So you can easily check this on the footprint chart, order flow, or just the regular volume indicator on TradingView or whatever platform that you use. If you see that there is a big move, but you can see that volume is tapering off, then you know that the move isn't sustained and that it will most likely reverse. So that's a good key indication to watch. Lastly, we have the market context, which consists of maximum 15 points. And this means that the trade aligns with current market sentiment, the economic calendar events like FOMC and stuff like that, and sector rotation. So you're not just reading the charts, you're also reading the market's mood. So the grading scale, you calculate all your points that you have in the previous 5 things. So let's say you have a trend alignment. Let's say you give it 15 out of 25 because you're not sure on the lower time frame which trend you're following. On the higher time frame, you might be in a consolidation or a uptrend, but the lower time frame says that you're in a downtrend. So let's say you put 15 points on that technical confluence, maybe 25 out of 25, which is really good. Anyway, you calculate all of these up, and if you get anywhere between 85 to 100 points, you have an A+ setup. Take the trade with full position size. So if you have anywhere between 70 and 84 points, you have a B+ setup, and you take this with a reduced position size, and anything below 70 points is a pass. No matter how tempting it looks, be consistent, be the trader that has discipline. If it's below 70 points, there will always be a next trade. This will not be the only trade, there will be another trade. Stop doing this to yourself and have discipline. If it's below 70 points, don't worry about it and don't take the trade. So create a simple spreadsheet and use Trading Journal app where that you score each potential trade before entering. This removes emotion from the decision-making process and creates a historical record of what constitutes your best setups. Over time, you'll notice patterns in your highest scoring trades, which will allow you to refine your criteria further and which will make sure that you have a solid trading plan and that you will only take the best A+ trade setups. Will you still take losses? Of course. Nobody has a 100% track record. Nobody has 100% winning trades. Nobody. But if you have an 80 or 90% win rate, you will be 95% ahead of all retail traders. So have discipline, make this plan, and stick to it. Next up, we have the waiting ritual. So good setups, A+ setups, don't present themselves every minute or every 5 minutes. So what do you do between good setups? Idle time breeds impulsive trades. So this component fills the gaps between A+ setup with productive activities that improve your trading while keeping your hands off the trigger, off the buy button. So the daily market routine, when there are no A+ setups, we have the morning market preparation. So this is where we review overnight news and the economic calendar for the day. Check what happened while the markets were closed. Check what happened while you were sleeping, when it was the other time frame. Let's say you're in the US, you're sleeping during Asia session probably. Just check the news. This can be earnings, geopolitical events like we have a lot lately, economic data releases. These could all impact your trading day. And this prevents you from being blindsided by market moving events. Check key levels. Look at your predetermined support and resistance levels, your trend lines. your key price points, everything that you're monitoring. So you're not looking to trade immediately, but you're just looking to get oriented. Where is price now in contrast to your potential entry point, your potential key level that you're watching, or your potential fib level, anything like that. So update your trading journal with your market observations. Write down your observations about market conditions, sentiment, any patterns that you notice. This builds market intuition over time. Next, set up alerts for potential setup development rather than just staring at the screen. Instead of watching screens all day, set price alerts near your key levels so that you're notified when something worth analyzing develops. You don't need to be glued in front of the charts all day. I see a lot of new traders. I was one of them who are just opening the charts in the morning, and they are sitting there 15, 16 hours a day in front of the charts, looking at price levels, looking at everything. If you like that, okay, do that, but trading gives you the freedom to do anything you want. Set your alerts, go do something fun with your kids, with your wife, alone, doesn't matter. Go to the gym, anything. Set an alert, and when your alert goes, check the charts and you're ready to snipe an entry. So next up we have the midday analysis, which consists of conducting analysis of your last 3 closed trades, so your previous 3 trades. Analyze what worked, analyze what didn't work, and what you could have done differently. This turns every trade into a learning opportunity. Read one trading-related article, or watch one trading-related or educational video. How to read market analysis. You could watch or read on trading tutorials, study trading psychology, keep your mind engaged with learning rather than just constantly looking for trades. Practice drawing support and resistance levels on historical charts. So you need to do backtesting. You need to pull up some old charts and practice identifying support and resistance levels, where you would have made an entry, where you would have put your stop loss. This sharpens your technical analysis skills during the downtime. And then lastly, we have the end of day review. Screenshots, take screenshots of your trades, save any developing patterns for tomorrow's watch list, save charts or setups that might mature tomorrow or next week if you're looking ahead or you're more of a swing trader. This helps you spot opportunities early without acting prematurely. Update your trading statistics and performance metrics. Track your win rate, track your average risk to reward, track other key statistics, because data-driven improvement beats gut feelings. This is an important one. Also plan tomorrow's potential setups and key levels to watch. Identify price points that you'll be watching tomorrow, so you start the next day with clear focus. And lastly, reflect on any FOMO moments and how you handled them. Be honest with yourself. Honestly assess any moments that you felt tempted to chase trades, and evaluate how well that you handled those urges. Be honest with yourself. Only you can do this. Only you know how you felt at that moment. Don't lie to yourself. It's just you and yourself. Nobody else. Nobody will judge you. Be honest with yourself. So, key principle here is to stay engaged with the markets without being reactive to every price movement. I know it's hard, especially if you're watching the charts 12 hours a day. There are potential B and C and D setups all the time, but just sit on your fingers and you're building expertise and maintaining market awareness while preserving your capital for when it truly matters. So, and then we have the final component, which is the how to handle FOMO, how to handle missing trades without chasing them. This is a really big one. We are all human. You can be the best trader in the world. Everybody has FOMO. Every trader I know, whether they are very profitable or just starting out, everybody has FOMO. It's just a human nature. We all have the fear of missing out. And the fear of missing out kills more trading accounts than bad analysis. It's sad, but it's true. And this protocol provides specific steps to take when you feel the urge to chase trades or to enter setups that don't meet your criteria. So I call this the FOMO response framework. And step 1 is pause. Just pause. And this is an immediate response. When you feel the urge to enter a subpar trade, implement the 5-minute rule. Close your trading platform, set a timer for 5 minutes, and do something completely unrelated to trading. This breaks the emotional momentum and gives your rational mind time to reassert control. The 5-minute rule forces you to break the emotional momentum that drives impulsive trades. Closing your platform removes the immediate temptation while doing something unrelated. Go for a walk, do some stretching, grab a water, grab something to eat. And this lets your rational mind regain control again over your emotional brain. So step number 2 is the reality check, and ask yourself these questions. After you paused and you maybe went for a walk, ask yourself these specific questions. Number 1, does this trade score 85 plus on my grading system? Ask yourself. Be honest. Number 2, ask yourself, am I entering because of solid analysis or because I'm bored or frustrated or whatever? Be honest with yourself. Number 3 is, what would I tell a friend if they showed me this exact setup? Again, be honest with yourself. What if somebody would show you this setup from your friends? What would you say? What would you think? And number 4 is, will I be comfortable holding this position overnight? This lets you completely reframe it and think of it like in a way that if we have a trade that we're not certain of and we would go to sleep, we wouldn't sleep for the first hour or 2 hours. We would lie there thinking, what if my trade goes against me? I'm not sure. I could have waited for a deeper retracement, all this blah blah blah. If you ask yourself this question, you will train yourself to think differently. And yeah, it really helps. It helped me, and it has helped a lot of traders that I taught this to. So these 4 questions force you to think logically rather than emotionally. So the grading system questions ensure that you stick to your standards. The analysis versus boredom questions, they help you identify if you're trading for the right reasons. The friend question provides emotional distance. You would probably give more objective advice to someone else, especially if it's a friend. And then the overnight question, comfort question, tests your true conviction in the trade. Then we have step 3, which is the cost analysis. Calculate what chasing this trade could cost you. If you lose your predetermined risk amount on this trade, how many A+ setups would you need to recover? What's the probability that this specific trade works versus waiting for your next A+ setup? And is preserving capital for the next great opportunity more valuable than taking this mediocre trade? Again, be honest with yourself. And this makes abstract concepts concrete by putting numbers on your decision. If you risk $100 on a mediocre trade, and you lose. How many $300 wins from A plus trades do you need to recover? This math often shows that the risk isn't worth it. Comparing probabilities helps you see that waiting for higher probability setups is mathematically superior, and framing capital preservation as an active choice rather than doing nothing helps you see patience as a strategic decision. So think about that. That's very powerful. Step number 4, document. Document the process. Whether you take the trade or you pass, you write down what you were feeling when you considered the trade. Write down what the setup was missing to qualify as A+, what you did instead of taking the trade, and how you feel about your decision 30 minutes later. That's a really good one. Writing down things serves multiple purposes. It slows down your decision-making process. It creates accountability for your choices. It helps you identify emotional patterns over time, and it provides data to improve your future decision-making. Then we have the last one, which is called the missed trade reframe technique. We've all been there. We've all missed the trade. You see that price might reverse at that point and go up, but you think, nah, it can go a little bit lower, and price reverse and shoots up. And yeah, you're thinking about your missed trade. But I have a framework for that, and that's when a trade you didn't take moves in your favor. Instead of dwelling on the missed profit, you need to focus on you successfully followed your system. This is a win for discipline. You preserved capital for the next A+ opportunity. You avoided the psychological trap of result-oriented thinking, and you strengthened your ability to stick to your criteria under pressure. Here are some emergency FOMO protocols. The account lockout. Some platforms allow you to temporarily restrict your own trading access. Use this during high FOMO periods. The position size reduction. If you absolutely must take a marginal trade, reduce your position size by 75%. This satisfies the urge while limiting damage. And the paper trade alternative. Take the trade on paper instead of with real money. You'll get the psychological satisfaction without the financial risk. So all of these 3 components are the framework to take A+ setups only. I hope you learned something new from this training tool belt. This is a key component to becoming a consistently profitable trader. If this struck a nerve, consider liking the video and subscribing, because I have a lot more valuable trading content to make you unbreakable and a profitable trader. So if you want a clean PDF of this full system of this I used in this video, you can download one completely for free by clicking the link in the description in the video. I will catch you in the next one. Trade safe.